What's up, guys? It's November 20th, 2024. I think today was a challenging day. Started out with strong three legs lower, and then we went sideways. Well, you know, although we had this bear leg, we were range bound since bar three. We didn't know we were range bound until obviously the day kept going on, and then rallied at the end of the day. Let's talk about the daily chart real quick. And 45-minute charts here, but I don't even know why. I really just reference the daily chart a lot. 1 second. I have been looking at the 15-minute chart intraday. So we'll think about it because I just have this here. I don't really look at it. I do look at the 15-minute every now and then. Anyways, 4 bar rally, creating a micro channel. Or it could be 1, 2, 3, 4, 5, 6, because the high of this bar is the end of the micro channel. The high of this bar is the start of the bear micro channel, because the market's is always in transition. The end of this micro channel is the low of this bull bar. The low of this bull bar is the start of this macro channel. So the market's always in transition. So let's just call it 5, 6 bars, 6, 7 bar micro rally, sell off, second leg trap into support. But let's not forget this candle right here is important because it traveled one tick below the strong bar here. It traveled one tick below the strong bar here, so that technically is its second leg. And now we have 3 bars going sideways on the EMA. We're starting to get closes above the EMA, but today's price action. Wait, I thought we closed at highs for some reason. We closed at highs. 935. Oh wait, the price, the market's still trading. Wow. That's some range bound price action for you. Testing the breakout. Wow, that's crazy. Okay, so I guess that's why we have a doji on the daily. Okay, let's bring it back. So let's put the calculator on the screen just to hide some price action here. I wish there was a way to just hide these numbers and it could be a square. Bar one, I took bar one for 1 hour, and the reason I did that was because the micro channel I was trading was this micro channel. We had a leg 1, pull back, leg 2, but I thought candle 101 was strong enough to get its own second leg down. So I'm talking about this candle here. Bar 102, the bar before the first bar of the day was a pullback. Bar 1, so now we're talking about this bar on the RTH chart. I don't always trade bar 1, but today the context made sense. 1 second. Yeah, so I went for 1-to-1 with bar 1. Bear bar closing on its lows. Yesterday was a double top, lower high. Bar 2, strong breakout, breaking below both EMAs. Bar 3, not the best follow through, but bears do have to take profit sometime. Bar 4 is the first channel line break. So now we're in the leg 2. I took the short on bar 5, sold on 6, and then I hit out of my short for a point before I really wasn't sure if this is gonna be a second leg trap, and we're testing around this area here. So as bar 7 raced up before it got to my entry below bar 5, I just scalped out around here for a point. However, all the trades went through today. Excuse me, what am I doing? Okay, so now we have a leg 1. Wait, what the heck? Leg 1. Then we have leg 2. Bar 7 is breaking this trend line, right? So it's kind of like this is what it looks like. The high of this trend line, the high of this channel is bar 4. It breaks with bar 7, and then we have a climactic price action 7, 8, 9, 10. So there's your 3 legs lower. What happens after the 3rd leg? We're going range bound. I think the price action has been hard to trade this past week, starting on Friday. Gap down, sell off, rally. Gap down, even nicer rally. Looking like we're going to see continuation today. Boom, super strong sell off into the range lows, testing. Wow, testing yesterday's bar 5. And now look here. So price action is fractal, right? Leg 1, pull back leg 2, pull back leg 3. And then within this price action here, within this bar, we also have 3 legs. Leg 1, pull back, leg 2, pull back, leg 3, leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4, and I'm counting the tails. Bar 11, sold off, trapping bears below bar 10, and it rallied. We know bears are underwater, but we also know we're in a range-bound price action from the previous couple days. Big down, big up, big down, big up, big down. Well, what comes next? We get a rally. I think it's safe to get out of shorts around 11. If you're holding for 12, thinking you're going to keep going lower. I do remember looking at the EMA, thinking we were like almost 30 points away. Yeah, the EMA was a little higher. I guess now we're 25 points away. I wouldn't buy this because at the end of the day, bar 11 is a range bar because it has more tail and then body. It has a blueprint, so that's good. Bears are trapped. Bar 12 is a pullback for bar 11. And you can see bulls got filled. The bulls that bought the high of bar 11 are filled with the tail on bar 12. When I put in my stats at TradingView, I have to have the prices on so I can see how much RR I made collectively. I made 2.5 R of my risk today, so that's kind of cool. 1 R is met, bar 18. Bar 11, strong enough to get Ito, second leg, bar 13. Bar 13 is a bull bar closing on a tie and a bear sell off, but I also think it's strong enough to get its own second leg. It's been about an hour since we touched the EMA. A little bit more than an hour, about an hour 30. Bar 14, second leg. Bar 15 is a pullback. Bar 16 creates 3 pushes up. I actually shorted 17. Looking for this price action lower. 18 rallied. I was a little worried. I didn't hit out of my longs though. I didn't hit out of my shorts because I saw we were testing this and I saw the tail on bar 18. I saw the tail on the EMA. I want to talk about yesterday's price action real quick because there was a question in the comments about this price action here. I bought here and I got out. Oh, I actually got out here and then bought again real quick and got out here because I wanted to see what would happen. You have a gap down, but a strong close on 12 and follow through on 13. Remember, these bear bars are just one big gap. So you can say the gap is like from, just make it simple like this. This is one big bear gap on the hourly chart. I guess we do use a 45-minute chart today. So here's these bear bars, right? That's one big gap, 2 big gaps. And then we rally, testing this high, but we have a tail on 18's high, so I didn't get out. So here I got out of my long because I wanted to see if there was going to be a tail. Here I held my short because there was a tail. And we had 3 legs up, right? So we're in a range bound price action, 3 legs down. And we have 3. I'm going to delete these. You guys see the legs. Then we have 3 legs higher. Leg 1, pull back. Leg 2, pull back. Leg 3. I want to see something. Make it red. I want to turn the arrow smaller. Oh, that is cool. How did I never know you could do that? Save. I always thought you had to have an arrow on that because that thing has an arrow, so I just assumed. Oh, I love that. Okay, so now we have a wedge top into the EMA, selling right into around the bar 8 sell off 7. I don't know how to say this correctly, but I don't trade with the supply demand zones. Okay, that's a thing, but I don't deal with that. What I trade is legs. So legs and market cycle, right? So the breakout restarts the market cycle. 3 legs lower. At the 3 legs, we're in a range bound price action. We have multiple gaps open, but the gap between 7, 8, and 9 get closed with this bull rally up. That's a wedge top into resistance. So I held my short even though I was in red about 3-4 points. Yeah, about 5 points total. I saw a drawdown. So shorting 18 would have been the better trade. Shorting 18, the bull bar. I'm into fading. I don't necessarily think you should fade right away. You could just wait for 19 to print. You could short 19, you could short 20. And then we get another 3 bar micro rally. So I got out of my shorts here. I saw 22 as a pullback. So now we have a leg 1, pullback, leg 2. And I got out of shorts as 25 closed. So there's a leg 1, pullback, leg 2. And you can start to see how over time, it's really useful to view the markets from a consistent perspective. Market cycle, leg count. Gaps open, gaps closed. and you apply it, since price action is fractal, it is applied across all time frames. I read the daily chart the same way. There's just not as many bars going into the thing, but you guys can still see I'm drawing gaps. Here's range bound, right? Gaps get closed. Then I'm trending. This gap stayed open. That gap is still open, actually. Have I been talking on this chart the whole time with the date? That's crazy. I thought I was talking on this chart. Okay, whatever. So we have 3 legs higher, and we have 2 legs lower. We're definitely range bound. Look at bar 25 testing the high of bar 11. When we have a micro channel against a micro channel, so this is a bear micro channel from here to here. This is a bull micro channel from here to here. That's a range bound price action. So there's multiple confluences telling us we're going to go sideways. And in sideways price action, you have to be willing to scalp. Sideways range bound, you got to scalp. You trade the first, second leg of a trend, be willing to swing. If you're in range, be very careful that this look how quick that happened. 5, 2, 3, 4. That was a 20-minute rally. That was a great rally. 25, strong bull bar on closing on its high, and bulls get a higher low, testing this. 27, strong breakout bar. I didn't buy this, but I could see traders who would. I mean, obviously they did. Look at these 2 bars. 28, 29, good follow through. 4 bar micro rally. Micro channel. 4 bar rally. Micro channel. I traded this, and I was looking for this price action. Here, I got trapped. I bought the low of 30, and it just kept selling. I was like, oh crap. My stop was down here. And a part of me did freeze on 33, but look at these tails here. 33 had a tail. There was a small rally, and we sold off. Bad tail on 35. I mean, excuse me, good tail for the bulls, bad for the bears. So I bought the close here, and I got 2 points on my average, whatever the heck that means. So this first line is my first buy. This second line, this line right here, was my second buy. I really do not advise averaging in, but I kind of recognize the bull rally, the bull channel, some like a bear flag, bull channel. I thought we would get some sort of test back up here. Above 31 would have been great. Excuse me, above 30 would have been great. Nonetheless, my average price was the EMA, so I was pretty happy about that. And then 37 gave me my profits. I got out for a point, and then I called it a day because I just didn't want to average down, and we were going range bound. Second leg traps. They're very dangerous. They are the bane of expanding triangles, and second leg traps are the bane of all breakout traders. I know a few of you have been caught in expanding triangles, trading in both extremes. It's the worst. Oh my gosh. And then second leg traps for me. Bar 40 is a second leg trap. What's a second leg trap? Well, second leg trap is exactly what it sounds like. Second legs are the highest probable trade, but here you buy 40, you get trapped. Leg 1, pull back. Leg 2, second leg trap. Leg 1, pull back. Leg 2, second leg trap. So this is a nested second leg trap. Bulls that bought 40 are trapped. We can see that with a tail on. Bulls that bought 40 are trapped, and we can see that with a tail on 41. Follow through 42, and then it goes, and then bears that short 42 are trapped right here. So there's a battle. This is dangerous price action trade. It's a TTR. It's also an expanding triangle on a lower time frame. Bear flag, leg 1, pull back, leg 2, pull back, leg 3. Bar 60 is a wedge bottom. Now we have a wedge bottom in a trading range. This area is support. We could say it's all the way down to here. Could say it's on to here. I wasn't trading it this time. I was just watching the markets. 60, 61, 62, 63, 64. Strong rally. Weak pullback. And wow. 68, 69, 70, 71, 72. Another strong rally. 5 bar. Micro channel. Big breakout. 73. These bars, remember in trading ranges, we get vacuums. So although this is a rally, yeah, it's still a vacuum on a 20-minute chart. This is a buy vacuum testing the highs. Very surprised this happened. You know, if you, please don't feel bad if you didn't catch any trades or had a small red day or a great green day. I don't know, but these days are the hard days. Today actually I went 6 for 6. That's kind of crazy to say. I'm gonna be cautious tomorrow. Anyways, let's go over the measured moves, and then I'll do some gaps. We'll call it. And guys, please keep asking me questions in the comments. You know, someone had a comment, I don't understand how you did this. I hope that answer was good and you understand. I'm going to keep, the way I look at the markets is through leg count, market cycle. And I'm trying to drill that down. That's how I view the context from a very strict perspective, but I'm loosening my entries. I like to focus on the context, and then as long as you read the context, you have a little more room to play with your entries. So the trades I took today, I took bar 1, got out for 1R. Took bar 5, but I had to scalp out on the tail on bar 7 for a point. Took bar 7, I scalped out for 1R. Kept going, then it went sideways on me. I didn't short bar 8 because this was climactic price action. This bar was the same size as bar 2. Bar 2 was the start of the breakout. Bar 8 was just as nice, and the gap was just as big. So that tells me, you know, biggest looking gap, nicest looking bar. We're most likely at the end of the trend. That's how people get trapped, because they think the trend is growing. But a good characteristic for a climactic price action is if it looks too good at the end of a trend, aka even bar 73, you're probably nearing the end of it. So that makes sense. Like here, this bar looks good, it's the start of it. Here, this bar looks good, follow through it, but it's near the end. We're near the range lows. So think about that. If you start to have climactic gaps, they usually get closed. And this gap did get closed. So that could be a target if you bought 11. That's not my type of trade, so I'm not really going to talk too much on that. But if you're range bound, you're going to fade gaps. If you're trending, you're going to trade with the gap. So, okay. Then we have, this was my target though for shorting the bar 817 thing. The real target was down here. It's not met. But, well, hold on. Remember, minimum for a leg is 1 tick below. So the trade for these 3 bars, 8, 9, 10, was met with bar 11 and it reverses. I scalp out around the close of 21 and I got short again on 23. And my target for this was just like this. And I had to scalp out on 25. I watched the rally here. I saw 30 as being good pullback, but ended up it was resistance. We were testing this swing point here. So remember when I said we were actually range bound since bar 3? That's what I meant. The last leg in a range is the last leg in a trend is the first leg in a range. Last leg in a trend, first leg in the range. So we vacuum test the range highs and we settle off testing bar 25 and we rally with that second leg trap. This was my target. I know it seems kind of crazy, but now we see the end of the day price action and it was literally met. But no way am I holding shorts or longs through this. I was a little bit confused when this happened, so I just decided to stop trading after I scalped out there. Like, you know what? I couldn't even tell you when bar 37 printed, I couldn't even tell you if this was going to be a second leg for this move up or if this was going to be a pullback for this move down. I was like, that literally means 50-50. Microchannel, which one's stronger? We're in a bear regime here, but we've been rallying, you know? I think this was a tough day. This really put a dampener on the trend. I didn't want to stop this early, but I couldn't give a solid answer. I almost started trading around here, and I saw that, and then I just said, no, you know what? I said I'm done. I'm going to be done. So we had that rally. We have this sell-off. Trying to get its own second leg, and that does get it barely gets a second leg 52. Put it to the high of the pullback. So you short the high of 40, thinking, oh yeah, this is second leg trap. You get filled on 52. Tough pullback to hold through. Got an expanding triangle. Another 3-bar micro rally, so let's check that out. Obviously we know it failed, but let's just say we took it anyways. It fails. High of the pullback, maybe 50, 54, low 55. You got to get out when you see 60, 60. If you don't get out at 60, you got to get out at 61. 60 is a bull bar closing above its high at the low of a range, and every time we came to this price, we rallied. You got to be thinking about that. You got to protect. Our first job is to protect capital. Our second job is to make money. Then we have another rally here. 1, 2, 3, 4, 5. 5-bar micro rally. Ding dong ding. Ding dong. 1, 2, 3. That's a wedge bottom after a bull rally, testing barely testing the 50%. We take this, maybe you buy the close of 67, maybe you buy the high of 68. 1.5 hours met. So yeah, challenging day nonetheless. Let's draw these gaps in real quick and call it. Just check the timer. We're at 20 minutes. Gap here. A couple of you are liking gaps, you know, gaps happen on all time frames. And earlier in the day, I said this is one gap, and it is. It's on a different chart. It's a gap. And we were range bound, and did that gap get closed? It did, EOD. So voila. Gaps are such a good way to read the type of context. Gaps are shrinking, you know, the trend is getting weaker, gaps are growing. Excuse me. If gaps are growing, I'm still having trouble keeping my breath when I'm talking from getting sick earlier this month. It's kind of weird. Yeah, so gaps are shrinking. Trend is getting weaker. Gaps are closing. That means we're in range bound. That's a negative gap, negative gap. Okay, we got a breakout gap here. Another gap here. Super sloppy, excuse me, guys. So this is a cool. We have 5 bars with 3 gaps. That's just strong rally. No gaps down. Rally again. I know I've missed a couple gaps. Here's a gap there. Here's a gap. There's a gap. Everywhere's a gap. All right. So you see how when we're selling, this gap stayed open. This bar 2's gap tested this high, so we vacuumed up testing this and sold off. These gaps, oh yeah, there's a gap right there. These gaps got closed, but then this gap stayed open. Bar 25, 26, 27 gap stayed open. They got tested. The 50% mark got tested, and we rallied again. These gaps got closed here. This gap gets closed. Is there not a gap here? That's a zero height. Oh yeah, there's a gap right there. And that gap gets closed with these gaps. And then these 2 gaps end up staying open, and we rally. And we're range bound price action, right? Look, the gap got, I mean, I'm always on the fence if this gap gets closed or it's open because of the body. I'm going to say it got closed because we're trading in range. So, leg 1, pull back, leg 2, pull back, leg 3, leg 1, pull back, leg 2, pull back, leg 3. Super deep pullback, testing the lows, leg 4. Many ways to read it. Guys, keep asking me questions, please. I love answering, helping you guys out. I hope they're helping. My goal is to put money in your pockets. So, yeah, let me know, man. Let me know, guys. I hope you guys have a good one. Thank you for your support. Thank you for dropping comments. I hope you guys had a good trading day. It's a tough trading day nonetheless. Hopefully, I don't want to get anyone's hopes up, but this is interesting, man. This is an interesting daily chart. Rally, sell off, and now we have some sort of triangle. Is it a bear flag or is it a bull flag? We really don't know yet until the price action prints. Anyways, you guys have a good one. If you learned something, share the show. Have a good night, everyone. I'll talk to you tomorrow. Bye.